the 10th, 2023, and another wacky day on Wall Street. Man, I tell you what, guys, if I wasn't living this and watching it, was reading about it, I would just think the whole friggin' world had gone off its rocker, listening to, getting this data we're getting, the stories we're getting, and the way the results are coming in. It just, I don't know, anyway, let's go all through all of this before I get rolling here. Let me, of course, welcome everybody to the show. Thank you guys for your support. You guys showing up every day, watching the videos, hitting the like button, your questions, your comments, all the fun stuff you guys do with us every day. It keeps us going, guys. Me personally, I can't tell you how much I appreciate you guys. All right, anyway, let's talk about these markets today. We knew today was CPI day, a very big day for the market. And we knew that it was going to affect this market one way or the other, and it did. The numbers coming in less than Wall Street expected, but still higher than they were last month. The market deciding this was good news because the market, the inflation numbers came in less than Wall Street estimated. Well, the market wanted to celebrate that, started off the day really hot, ended up coming back down to earth a little bit as they digested the real news of the day. Inflation was up. You can say, well, it beat estimates, but it's still up. So anyway, the market coming back down, still finishing positive, but just barely. The Dow Jones up 52 points, sitting at 35,176. The S&P up one poor solitary point, 4,468 on the S&P. The NASDAQ up 15 points, 13,737 on the NASDAQ. So basically what we ended up with today was pretty much a big nothing burger. Not a lot happening in these markets, just up and down. Traders moving their positions around as they digested the information, which we will go over in detail in a minute here. So we'll see. Tomorrow's a big day. We're going to get PPI and a whole bunch of other data. I think tomorrow, there's a high likelihood that tomorrow could be the most volatile day of the week. The market's been really pretty quiet all week, kind of waiting for this news. Now we're trying to digest this news. Well, the news is not great in my humble opinion. So we'll see now how PPI comes in tomorrow. And if that number comes in bad, it's going to just be an ugly day. If the number comes in where it supports this idea that beating estimates is good, the market could rally tomorrow. So we'll be here to report it, good, bad, and ugly. Bonds today selling off. Of course, everybody understanding that rates are going up and going to stay up. 10-year jumping 7 basis points, sitting at 4.08%. The 2-year up 4 basis points, sitting at 4.85%. So you can see this inversion starting to shrink a little bit. I actually heard some talk today on Bloomberg about maybe this is the start of the curve, rather than being inverted, reverting back to normal. That would be something, because if that's the case, with the 2-year sitting at 4.85, the 10-year has quite a ways to go to get into what I would call a normal looking curve, right? Figure I've got to be a minimum of 50 basis points higher than the 2-year, probably more than that. So here we have it. Bond market gonna have to, digest some of this stuff. Some people at the market, the market factoring no more hikes this year. The market factoring rate cuts next year. I don't see either one of those things coming out, right? So that's the way bonds are being priced. We'll see. The bond market, truthfully, still being priced as if a recession is imminent. There's not a lot of evidence pointing to that right now. So we'll see where it goes. It's going to be fascinating, though, for sure. The dollar today up very small, not a big move in the dollar, sitting at 102.64 on the index, still right there where, it's the strongest currency in the world right now, especially against the basket of other currencies that it sits within this index. So the dollar holding its own. Strong dollar, weak metals, gold dropping 40 cents today, $1,914 for an ounce of gold. Silver down just 4 cents, $22.78 for an ounce of silver. Metals, decent prices, but trending, not trending good the way I see it. This strong dollar putting a lot of pressure on those prices. We'll see now. It's the tug of war between the dollar and gold that's always been going on. I think gold has a chance to really rally some, silver especially. Silver is once gold gets hot and people really start buying gold. Silver usually has a big run because the masses, when they look at a $2,000 for an ounce of gold, $25 silver looks really cheap. They can buy a whole bunch of it as opposed to just 1 ounce. So silver usually has a run when gold gets hot. Hasn't really materialized yet, but we'll see, man. If these things are starting to get interesting in these markets, we'll see where it goes. Oil today, well, given back some of the gains, it's been blistering hot lately, but falling today, down $1.54 a barrel, $82.86 for a barrel of West Texas Intermediate. Coming back down, we'll see now. And I was kind of figuring that it looked like it broken out of that trough it's been sitting in for about 6 or 7 months. Now it looks like we're going to not jump to conclusions too quick on that. Let's see where oil goes in the next week or so. Bitcoin today up very small, up $21, $29,418 for a Bitcoin. I always want to say an ounce, that's the way when I see coins, it's usually the way they're weighed, but Bitcoin a little bit different, 29,418 for a Bitcoin. All right, so let's talk about news we need to talk about today. We knew today was CPI day. That's the day we've been waiting for. The market's been holding its breath waiting for these numbers. Well, here they are. Top line comes in 3.2%. So from last year to this year, 3.2%. Core numbers coming in at 4.7%. Okay. Now, for core, of course, excluding energy and food. Okay. Well, energy and food both were up, so I don't know anyway. Core as well, moving higher as well as the top line. Now, what happened was Wall Street economists had forecast the top line being at 3.3% and core coming in at 4.8%. So because the actual numbers were better than what the economists had predicted, the market looked at it like it was great news. Even though the top line last month was 3, this month 3.2. Core last month 4.5, this month 4.7. So this is the first time inflation has jumped in more than a year. Somehow the market wanted to spin that into good news. I really didn't see it that way. So it's I think what happened is the market, as it digested the news, coming back down to earth, finishing the day basically flat. Now, almost all the inflation that was in this report was food and shelter. The stuff we deal with every day, right? Shelters were up. Shelter costs up 7.7% year over year. Food costs jumping almost 5% year over year. So those are the two main drivers of upward inflation. Downward stuff, used cars, airfares, healthcare, TVs, and that kind of stuff, all coming down the most. Now, here's the weirdness about it, and this kind of explains why, even though the inflation numbers are coming down, it doesn't feel like they are. Because the stuff we deal with every day, food, rent, and gasoline, are going up. The stuff we deal with very rarely, used cars, healthcare, this is not everyday stuff. Airfares, how often are you buying a new computer or a new TV? So these, the everyday stuff is what has the inflationary pressures. So it feels like inflation still sucks, which it does. Food, energy, and shelter. Now, wages, on the other hand, continuing to climb just a little bit faster than the inflation is climbing. So they were reported today, real wages after inflation year over year up 1.1%. So wages climbing, it's not anything, certainly not dramatic. 1.1% is not even if you're netting out 1.1%, it's certainly not a lifestyle change, right? But wages at least keeping pace with inflation. Doesn't feel like that to me here either. But that's what they're saying. So these are the statistics we place our wagers on. Now, market pricing, the market says no more rate hikes this year, with rate cuts coming in 2024. I gotta tell you, I got my doubts on that. I really believe still and strongly that we're going to get another quarter point next month in September. I think these numbers today justify another quarter point. Inflation going up, not down. We're trying to get to 2, not 4. So I think that, it's certain we're going to get another rate hike. In my mind, we're going to get another rate hike, maybe 2 this year. One more rate hike puts us right at the Fed target number, which they had all along at 5.6%. So that's a certainty we're going to get that. The question is going to be, will these inflation numbers remain stubborn enough for them to go above that target number? Now, the interesting thing here, they're going to meet September 20 will be the day they come out with their their results of their meeting and their press conference and all that fun stuff. So we'll get another CPI number before that. We'll get their PCE index. So we're going to have a lot more data to look at before the Fed's next open market committee meeting next month. However, judging these numbers, I'm saying we're still going to get that quarter point increase. And these numbers tell us for sure that we are by no means out of this inflation woods yet, okay? A lot of work still to be done. We already had the Fed yo-yos out there talking today, daily, saying there's more work to do, rate hikes probably coming, there's blah, blah, blah. A couple dovish governors coming out saying this could be a chance for them to pause, grabbing at that inflation came in lower than they expected. Well, I think that the Hawks are going to win this fight. Next thing we talk about today, the other big data we were waiting on, jobless claims. Now, we all know the Fed has been targeting jobs, feeling like the hot jobs market and the wage gains that come with the hot jobs market contributing to this inflation, something to be fought by the Federal Reserve. Well, it looks like they're starting to have their way, guys. Jobless claims jump up again, 248,000 this week. They were estimating only 230,000. It's a jump of 21,000 from last week. Now we need to get to 285 for jobs to basically be in a contraction kind of a number. So we're not there yet. So the market's still growing, but less robust than it was growing, right? So we'll see where this all goes. We know the Fed wants to fight this fight. Now, continuing claims, on the other hand, fell by 8,000 to 1.6 million. Now, continuing claims are the people who make their initial claim and then continue to claim unemployment. With it falling by 8,000, that tells us that people that sign, they get fired or laid off or whatever it is, they sign up for unemployment benefits, they go to looking for a job, they find one quickly, and aren't forced to take continuing benefits, which is probably pretty good. But still 1.6 million people collecting the benefits continually. Truthfully, that sounds like a big number, but historically it's pretty low compared to the size of our workforce. So unemployment, employment numbers still holding up with these higher CPI numbers. Again, it leads me to believe, I think any reasonable analyst would agree, these numbers are not great. Not horrible, but not great. And they're just so blah, that I think another hike's coming. A couple quick hits today. Disney today beats their third quarter expectations. Stock has a little pop. If you're a Disney or Hulu subscriber, be informed they're raising their prices on those streaming services by around 20%. So I don't know if you get regular bills on that. Just be aware. Take a look at your checking or however you're paying your credit card. Make sure they're not gouging you because big price increases coming on Disney. PayPal today comes out with their own stable coin, PayPal USD. It's parity with a dollar, designed to be used pretty much like a dollar. You can keep it in your crypto wallet. You can spend it, use it on PayPal. So we'll see where that goes. And if it works, how many companies are going to follow suit? I think pretty much everybody, right? I saw a funny thing today, millennials and Gen Z people having such difficulty getting started in real estate, getting started in starter houses, buying their first home, that they're starting to be called guppies. Guppies, given up on property. So basically, these poor kids not having an opportunity to really move out, buy a house like we did, tending to stay living with their parents a lot longer than we did. Now they're going to be made fun of. Poor guppies. And lastly, I'm sure all of you guys have seen this. Maui in the middle of a giant, horrible fire out there. If you got plans to travel to Hawaii, take a look at those plans. I guess, their big tourist attractions are all burning down. People are jumping into the ocean to save themselves from fire. 32 people dead. Let's keep our friends and brothers in Hawaii in our thoughts and prayers. And not like a politician, but for real. Anyway, guys, that's it for the day. Appreciate your support as always. If you like what you're hearing, please hit the like button. It changes the algorithms around on YouTube, gets our video out there in front of some more people. As always, hit us up with your questions and comments and stuff, or your comments in our comments section. I'll be on today to give you guys a little bit of hassle of going back and forth. It's always good to get on comments with you guys and have a little bit of back and forth. Anyway, that's it for the day, guys. We really appreciate your support. We'll be back tomorrow. PPI numbers tomorrow. Big day coming. We'll be back to give you the news you need. Until then, guys, take care. Thanks.